There you have it, the closing bell at the New York Stock Exchange, ending another day of trading. The Dow Jones rallied from losses earlier in the week, ending up about nearly 350 points. The S&P 500 ended up around 1%, and the Nasdaq is up around 2.5%. JD Durkin, host of The Street, is here on set, joining me now. JD, what was driving The Street today?
Well, I think at long last, investors get that the little bit of relief rally that they had been hoping for. Of course, we are in the heart of the Santa Claus rally season. That refers to the final 5 trading days of one calendar year, Lana, and the first 2 trading days of the new calendar year. It didn't seem the last few days as if we would really have it, but perhaps this is at least a one-day reprieve on some pressure. We got some weekly jobless.
It's nice whenever we see some of that green on the board.
Especially when you have many days in a row. It's been a losing week. It's been a losing month, and certainly been a down year as well. The good news is, historically, the S&P 500 does not typically get back-to-back losing years, so it remains to be seen with the remaining days of the so-called Santa Claus rally window. This is welcome. We got some weekly jobless claim information out this morning that might indicate to investors the Fed might be a bit more dovish with regards to raising rates after the new year. That certainly, and that decision remains to be seen.
And JD, speaking of that time period in between Christmas and the new year, we only have one more day of trading for 2022. What are you looking for in the next year on Wall Street?
Yeah, absolutely. Well, to the point about tomorrow, it's expected to be a pretty high volume trading day. You got a lot of investors out there engaging in what's called tax loss harvesting or tax loss selling. They'll basically say, I may have lost.
They're looking at their books and they're trying to figure out.
And they're trying to maybe offload some stock or equities before the end of the calendar year so that they can deduct their taxable income, either on capital gains or on ordinary income. So the last trading day of the year, Lana, typically very high volume. And then as we turn around the page to next week, we already get a fresh set of economic data. Investors will want to maybe rebuy back some of those equities that they sold off this week. So we'll certainly see what they have in store as soon as we officially and finally turn the page to 2023.
Sure. And JD, as you're talking about economic data, you know, obviously one group that's looking through all that economic data as well as the Fed. How much is that going to play into what we see on the markets?
Oh, I mean, that has been the story of the year. I have no doubt that it will continue to be the story of the year. You and I have discussed before, investors would love to see Fed Chair Jay Powell and his colleagues at the Federal Reserve be more dovish, don't raise rates aggressively. But this is what the Fed feels like it needs to do if it is going to be successful in bringing inflation down to earth and cooling down this economy. There's a lot of goals of the Fed that sound counterintuitive. They want to see unemployment go up. They want to see wages come down. And the Fed wants to limit the spending power of Americans in the day-to-day economy. Lana, I know you've got viewers who are saying, what is this guy talking about? None of that
it sounds so contrary to what we want.
It absolutely is.
But they're looking for that soft landing.
Economics is called the grim science or the dismal science for a reason. Sometimes the goals of the central bank don't sound as if they make sense, but it's an unenviable task to try and bring inflation back down to its goal of 2%.
All right, JD Durkin, thank you.
Thank you.